Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, on to the show.
All right, good morning, guys. Welcome back to another live stream. Hope you are doing well. We got our little intro music to play. Also, I'm setting up our Twitter for today's live stream. I do not have James in today, so I'm just adding the links for stuff. Bear with me here. Okay, all right. Okay. Comment should be on Twitter. We got people watching us on Twitter. We're live on YouTube. It's a good day. Happy Friday, everybody. Hope you're doing well. Okay, there we go. Twitter should be good to go. Okay, so for those of you guys, so as I get started here, let me just make a quick mention that our giveaway is live. There should be a link. We're going to drop a link here in the chat if you don't mind, Chandler. And I think we are good on... Oh, gosh. I need Julie's help. Chandler, can you ask Julie to help me clean up the A1 Trading Twitter comment? I'm trying to get everything commented set up, but I should have set this up for today. Anyways, hope you're doing well. Thanks for being here. I got a couple trades on we're going to be talking about today. We're going to be talking about the latest in markets, what's on the docket for next week. Good morning, everybody. Hey, everybody. Thank you for being here. Shout out to all of my regular friends. There's several of you guys who I recognize your names. You show up each day. So I have a couple trades I want to discuss. I'm long gold. That's going well. I am short Bitcoin. That's about flat. And we've got tons of other stuff to talk about. Okay, so first, we'll get to gold in just a second. Let's talk about the stock market, where we're at with this. Markets keep pushing higher, and when I say markets, I'm usually referring to the S&P 500, as it's kind of a general read on how the overall market sentiment is, right? Because if markets are really optimistic, you're usually going to see the S&P 500 rising. And if markets are not so optimistic, usually you see these big correction moves. We have recently seen a pullback in the S&P 500, and we can only call it a pullback. We can't call it a correction. I believe a correction, technical terms wise, is a 10% pullback or a pullback that exceeds 10%. I believe a bear market is a 20% peak to trough move. So yes. Also on production side today, Chandler, if you could just help me check out the Twitter. I want to make sure that the links in the comment below, everything are okay on the live streams. You know, Twitter's been really popping off recently. Do you guys use Twitter? I know my YouTube friends, obviously you like your YouTube spot. I'm with you. But I've recently made the transition over to Twitter more and more. I just love the platform. It's really, really good for connecting with other traders. Anyways, where are we at price action wise? Well, this is a technical pullback. By definition, has not yet been a correction because it hasn't hit 10% down. And in fact, now with the recent bullishness that's come back into the market here, we are officially seeing what looks to be a retest of the highs. We're not quite there, but we are pretty gosh darn close, guys, to retesting the all-time highs for the S&P 500. The NASDAQ also pretty dang close, and the Dow Jones not too far off. But overall, my take here is that it looks increasingly likely that this bull trend just does not want to quit, and that we very well may head back to retest these highs around 52.60, 52.70. So we'll see where those go. Okay, so when we get to those highs, or if we get to those highs in the next week or two, what's going to take us higher? What's going to get us to decisively break out and continue the rally this year? Well, there's a couple things about this year that you have to keep in mind. Let's start short term. Next week we have CPI. CPI has the potential to completely erase or elongate this rally. There's no more Twitter, Nick, only X. I don't know, man. I think I can. I just don't know if I can ever call it other than Twitter. Twitter's just such a better name. I don't make the rules. I don't know the company, and I don't have the wallet size that Elon Musk does. But again, for me, I call it Twitter. I can't change. Is bullishness for the stock market good for the dollar? Not always. It's the stock market is not necessarily always a great indicator exactly of the economy, which is a little weird, but it's true. Arguably, the dollar's a little bit more accurate, because a lot of times the stock market rallies on hopes for stimulus, even if the economy is looking a little weak. If there's like hopes that the Fed will print $1 bajillion, the stock market might like that. So it's a little bit more of a more of a sentiment almost thing. Anyways, next week we have CPI. If data comes in hot, that's going to be not good for the rally, and perhaps we even see this rally turn into a sideways market. That is entirely possible. And in fact, from a weekly chart perspective, guys, I really think that there's a possibility that we actually could go into a bit of a more sideways action market. Part of the reason why I think that could be possible is because this year also we have elections, and elections are a volatile time, right? Because if you guys remember in 2020, when we had all of the Trump and Biden stuff, it gets volatile. Everybody's social media gets super opinionated, and it is a wild time. Well, same thing in the markets. And as we approach elections this year, the question is, are we just going to see a little bit of choppiness as people try and decipher who's going to be the next president? What are the next policies going to be? There is an impact on markets, and I think it's worth, being aware that we very well could enter into a bit of a sideways period. We've seen, at least on the stock market, just a massive run up into, first quarter of the year. It really paused in April. We saw a pullback there, and now we've just jumped back into the bull side. So we'll see. The thing is with the stock market here, you have to ask yourself, what is driving this higher? And we're going to talk about gold. We're going to talk about the dollar. We'll talk about other things here for a second, but why? Why is the stock market moving higher? It's partially because of two things that I see. E, for earnings. Earnings actually came out pretty good for a lot of the big tech names that are, let's face it, dominating whether or not this market goes up or not. So you had like Microsoft and Google, and Meta actually had good earnings, but the market didn't like that they're talking about investing in the metaverse again. So my point there is that, by the way, stock market just opened up, so we're probably going to see some volatility on the indices here in the open. The other positive, I think, for the stock market, there's two other things. The Middle East seems to, at least for now, have cooled off a little bit in terms of headline news. So these two things are positive, and we'll put Y for yields. Yields have been coming down, and that's, by the way, another positive thing for gold. If you're wondering, yields are interest rate expectations. They're what you can go buy treasury bonds for, essentially. And so when we talk about yields, I'm talking about like the 10-year government bond yield. So right now you can go get a essentially risk-free 4.48% per year in dollars. The risk there is that you're getting paid in dollars. If the dollar falls apart, the bond world falls apart. There's always risk to everything in the markets. But the thing here is yields are really important. They've come down a little bit. Stock market has celebrated that because, again, we had some light jobs data. Jerome Powell seems less hawkish than he was feared to be. So currently the sentiment for the stock market seems to be on the up and up. In my opinion, even pullbacks look like high probability entries for now to the long side. That's again, my current opinion. If it changes, you guys will, I'll let you know, of course. Let's move on though. I want to talk about the dollar for a second. Someone asked me if the dollar and the stock market are correlated, and they are actually oftentimes inversely correlated, more so than they are correlated, which is kind of confusing. But the stock market, if it senses that stimulus or money printing is going to go on, it loves it, because money printing means more money for businesses, more money for borrowing, more money for the consumer. They can go spend more money, right? But that's the opposite effect to the dollar, right? If they're going to lower interest rates, print more money, et cetera, that's going to be weak for the dollar. And that right now kind of seems to be the theme. But at the same time, it's dependent on what the U.S. economy looks like. Currently, here's where we're at in terms of setups. I know this stuff can be a lot of talking, a lot of fundamentals jargon, but I promise it's important stuff. Currently, what we actually use to isolate fundamental ideas or economic data-based ideas is the Edgefinder's top setups algorithm. We've computed this, or we've built this algorithm to compute bullish and bearish setups based on the data points that we find to be very valuable, like PMI data, like GDP numbers, retail sales numbers, CPI data, employment data, interest rates, the trend, seasonal trends, where retail is positioned and where smart money is positioned via the COT data. So this is the Edgefinder's top setups page. By the way, if you guys would like a 30-day trial, if you'd like to check this product out, you can get one. We're going to drop a link here in the chat, and that should also be available on Twitter. I believe should be the comment below. So make sure to, okay. If you're watching on Twitter and you'd like to try out the software, click that Edgefinder link. You can request a trial on our website. There you go. Cool. Thank you, Chandler, for dropping that. Again, fill out that application if you'd like to try out the tool. So again, top setups right now, I'm still long gold myself. I mentioned this. In terms of the dollar's actually getting some bearish reads recently. Look, there's dollar Swiss. Dollar Swiss, the employment data here really flipping the scores bearish recently. You had jobs data that came in light, not so great for the dollar. GDP numbers came in light. So the Swiss franc against the dollar, that actually is looking short-term bearish, which I think is kind of interesting. Let's take a look at USD CHF. Is there anything happening here? And let's just start with a fresh chart. Dollar Swiss, not a chart that I trade very frequently, but this one and the euro in terms of currency traders, these are what we're seeing right now. This is a 4-hour chart. So let's do this. Little bit of a, kind of downward trend forming. It's not the cleanest chart. It's not my favorite, to be honest, but that's one of the ideas. Remember, the Edgefinder is not a technical tool. A lot of times people get that confused. They think, oh, the Edgefinder is like a technical analysis tool, but it's really predominantly built for fundamentals. I think all of us have a plethora of technical tools at our disposal. What I think people don't have is they don't have tools to help them with fundamentals. And that's where my company, A1 Trading, specializes in, is building software tools for people who want to incorporate fundamentals, but don't have any idea how to program. And you shouldn't really have to spend, the amount of time that we've spent in order to build it has been years and a lot of salaries. So candidly, it's a wonderful product. If you haven't tried it out, again, click the link that we just dropped to try out the Edgefinder. Thanks, Chandler, for dropping that in Twitter too. Actually, Chandler, was this dropped by you manually? I'm just curious. Did you drop that manually, or did that get put out by StreamYard? That's kind of cool. Okay, you dropped it manually. Okay, yeah. I was about to say I didn't know StreamYard could do that manually. Got it. Yeah. So, anyways, let's keep pushing on. The Russell's back on a bearish setup. I'll have to keep an eye on this. I also have a Bitcoin short. It's no longer a setup here, but I have two trades on that I want to talk about: a gold long and a Bitcoin short that has since disappeared from the setups list here. But I'll show you each one of those. So let's talk about gold first. I am long gold. So let me find, where's my gold chart? Gold here. So I am long gold as of over a week ago, but I've been in this trade for a minute. Here's my GLD P&L currently. We're floating on this trade, $4,300. Stop loss is trailed in profit, though with gold, I'd love to see if I can actually trail a stop again today. If we see, well, actually, I probably will trail a stop here. My goal here with this nice closure above resistance is to trail a stop just below this 2350 level on the spot price of gold. And of course, the equivalent on my GLD ETF that tracks the price of gold. Not able to type in the Trader Nick Twitter chat. Oh, weird. Weird. We're learning on Twitter, guys. Look at that. The NASDAQ bouncing back here today, up 0.5%. The S&P up 0.3%. Oil's up 0.3%. Gold up 0.78%. Silver slightly down on the day, and Bitcoin slightly down on the day. So this is my Bitcoin short, IBIT. So I'm currently down $70 on my my Bitcoin short. And thought process on this one from a technical perspective is really simple. We had, kind of put in this multiple top around the 72,000 mark, and the news was going crazy, right? Everybody was talking about Bitcoin again. And I feel like that has really, dwindled. The news hype, and not even my feelings. If you pull up Google Trends, you can data wise, you can see that the search volume on Bitcoin, the word Bitcoin has really, kind of come down from those recent peaks. And so I think that, one thing that plagues the crypto world, in my opinion, is that if you are watching, the crypto world and everybody is talking about it, it typically is a great positive catalyst. The more you see Bitcoin being talked about, the more of a buyer I am. But if the market starts to cool off, it's almost like an indicator by itself. The amount of Google Trends data showing you, the word Bitcoin being searched is almost like a good indicator. Anyways, lower highs, lower lows. We recently poked down into the high 50s, price coming back up into this area. I'm short with a stop loss above here. And if that stops me out, then all good. Now, why shorting Bitcoin? I don't really trade it that frequently. Well, part of it is because although I have several bullish positions on the market right now, and I'm loving this rally overall, I also have a little bit of skepticism about the rally, simply because you had good earnings, yes. You have yields dropping, yes. But my concern is that, as we see yields potentially continue to drop, my concern becomes, are we going to see yields dropping because perhaps the economy is starting to slide? And if the economy is starting to slide, that is where you'd probably see yields falling, but the stock market also not liking it, right? Because cooling, a real cooling economy would indicate that businesses are going to hurt. And if businesses are going to hurt, if the consumer starts to feel the pain, if unemployment ticks higher, whether you like it or not, to the Bitcoin crowd, my opinion is that if the consumer takes a hit, that's the consumer is the one who's, a big time buyer of Bitcoin. It's a very young person, investment class, at least anecdotally. And from would you guys agree? Like, I feel like the average person that's buying Bitcoin, most of them are like under 30 years old, I think, So anyways, my thought process is that the consumer starts to feel the pain. If we start to see unemployment start to tick up, if you get people a little concerned about, being able to have any extra money around because of the inflation stuff, Bitcoin might struggle in that environment. We really saw that actually be the case. You might say, Nick, Bitcoin doesn't trade on fundamentals, but it absolutely does. Look when it had its big crash. The same time that the stock market had the big crash. In 2022, when the Fed was rate hiking and nobody knew when the end was, suddenly you had Bitcoin just getting killed because it's a risk asset. At least in my way of speaking, or my way of understanding this, Bitcoin, get as fancy as you want with the technology, with the idea. I think that it's a great technology and not a bad idea at all. I'm not a Bitcoin bear permanently by any means, but it's a risk asset and it's like a leveraged vehicle. So I'm short Bitcoin with a stop above the recent structure highs. I could totally be wrong about this. And if I am, then I will gladly pay the Bitcoin bulls, and maybe I will, if price breaks through the highs, then fine by me. But my thought process is this is a little bit of a hedge to my current long exposure on the stock market. What website do you use, Nick? I'm not sure which website you're referring to. If you're talking about my charting, this is tradingview.com. If you're talking about the fundamental analysis tool, this is A1 Trading's Edge Finder. You can find it at a1trading.com. We'll also drop a link here in the chat. If you would like to try it for 30 days, you can fill out this form and we will contact you with information on your trial. So if you'd like to try out the tool that I use in all of my videos to help spot my trades, check out the Edge Finder right here using this link. And if you're watching on Twitter, again, there should also be a link pinned, or maybe not pinned, but at least commented below the live stream. So here's the thing, guys. I actually don't want the S&P to go any higher, and I'm going to tell you why here in just a second. Hold on. Let me pull up my stuff here. Okay. So the reason I don't want the S&P 500, and I've mentioned that I've been being cautious with my S&P 500. I mentioned like my hedging ideas. So let me show you this. So I'm just going to show you, let's see, options, sorry. I was like, where'd all my trades go? Okay, options. Okay, so the reason I don't want the market to go any higher is because I've sold calls against the market, but they're covered calls because I own shares of VOO. This is the S&P 500 ETF, or one of them. I'm up nicely on this trade, but I've also sold calls for a strike price of 480 on VOO, expiring May 17th. Okay. Can we get sectors in the Edge Finder? The Edge Finder is probably not going to go that direction, but stay tuned. Longer term, we have some fun new products that are going to come to market. Just give us time. Trust that we will certainly have sector related analysis tools in the future. It's something I'm thrilled and very excited about, but I got to keep it on the down low. If you want to keep up with the latest, you guys can join our Telegram channel. We'll drop that link in the chat. It should also be linked below the Twitter post. We keep you guys updated with what's going on inside of Telegram pretty frequently, if you have Telegram. So let me keep going with this. So VOO, my strike price here. So man, it's kind of frustrating. I have a mean reversion style of trading, and I have two strategies: a momentum-based trading strategy, which I think most people are familiar with that watch my videos, like my gold trades, like NASDAQ, S&P, where I'm just buying or selling and trailing stops when it moves in my favor using market structure. I call that the true trend following strategy, the TTF strategy that I've used for years and years. In the last 2 years, I guess, I've incorporated a mean reversion strategy that I use options to essentially trade, ETFs that I like, bonds, things like that. Anyways, I sold puts on VOO, which is the S&P 500. I sold puts and the market came down, so I got assigned the shares. So I got into the position over here, long. Then recently, I thought that the market would roll over further. And for a little while, I felt pretty good about my decision to sell the 480 calls, thinking, look, the market's coming down. Very nice. I'm in the position and I'm collecting profit for selling that call. And sure enough, the market ripped up and is now looking like, if we trade any higher, if we're at this level or higher by May 17th, what's going to happen is my shares that I'm in on VOO will get called away. So when you sell a call, you get paid a premium, which is nice. But ideally, I would actually like the S&P 500, and it doesn't matter what I like, but I'm just telling you for my trade perspective, I, from here, will not make any extra money. If the market rips like that for the next 7 days, I won't make any additional money because I am hedged above this position or above this price. So ideally for me, I mentioned that I thought the S&P 500 would not make this move at all. So I've been wrong about that, but I'm still making money even though I was wrong. That's the amazing part about, my mean reversion option strategy is I can be wrong about direction and still make money, which is so cool. Like I said, I thought the S&P 500 was going to reject and actually move lower, but I didn't. I was wrong about that. The market continued to rip higher, and you might say, well, Nick, if you're wrong, how are you up? Well, it's because I got long. I sold calls thinking I think it's going to go sideways or slightly up. I just didn't expect it to reverse hard to the upside. And even though it did, I lose money on the calls that I sold, but I'm making money on the shares that I own. I know that this is probably one of the more complicated sides of my content is when I talk about my options trading. But can you guys let me know if you like me talking about my options trades? Can you just drop a yes in the chat? If I see a bunch of yeses, then I'll do it more often. If I see a bunch of no's or not a lot of yeses, that tells me that you guys don't really care to see me talk about my options trades. I'm still going to do it, to be honest, but I'll be quicker if people are like, I don't really understand. I don't care about that. Just get back to talking about gold over and over and over. And then when you get done talking about gold, start over and talk about gold again. That's how it feels sometimes as a content creator. Everybody's like, what about gold? What about gold? Okay, so there's a good mix of you guys. Like I said, I try and keep it quick on the options side. We do have some people who like the options side, but again, I will keep it relatively brief. Look at that S&P just ripping higher. So, like I said, yeah, Forex more. Forex has really made its way slowly out of my content. It's kind of sad, but at the same time, I talk about the dollar frequently, but really, I trade the most gold and indices. So that's really about, what I focus on the most. I talk about the dollar because it's very relevant. I talk a little bit of euro dollar, a little bit of dollar yen, but primarily we talk about gold. We talk about the indices, etc. The dollar index, speaking of, is still kind of struggling here, man. It is just, it found support after the big sell-off on jobs numbers. It found support here around the 105 level, bounced back up, and now it just seems to just want to trade sideways. We'll see where it goes. Forex is slow. It is. Most of the time, it is just very boring. There was a period of time where I traded Forex so much during 2022 because the volatility was there. The dollar index was a really, really, kind of, I don't want to say obvious because nothing is, everything is obvious in hindsight. But during 2022, man, I traded the dollar just constantly, and it was awesome. Anyways, real quick, guys, we're going to take just a quick commercial break, and we're going to be right back with Kenzo from Extra Hot Forex to talk a little bit more markets. It's Fundamentals Friday, so we're going to talk some with Kenzo. Just a moment. Be right back.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with Kenzo. Hey, Kenzo, how's it going, man?
I'm doing great, thanks, and you, man?
I'm good. It's good to have you back on the show. And again, we call this Fundamentals Friday because we talk a little bit about what's going on in the fundamentals side of things. Kenzo, the dollar index has been trading lower. We've seen stocks make a recovery move here, big time, actually. Real big push here recently, arguably for the same reason that gold is up, which is, yields have backed up, or they were backing up. Now they're coming down again, which is, kind of a bit of a relief to some of the more rate sensitive sides of things, especially things like the NASDAQ. What are your thoughts? What are you watching in the markets right now?
Yes, I'm also actually on NASDAQ, S&P, and also US 30, plus gold also. So I think this move came after very disappointing jobless claims yesterday. And if you still remember, this week we do not really have any aggressive economic news. So it's like the market is just focusing on that. So that was actually good. And since yesterday, the market has been trying to recover because that's actually a cool off in the job market. So that can actually accelerate the room for the rate cuts. But we will see next week when we have CPI.
Yes, and CPI is definitely the big event of next week. And as you mentioned, the excitement around maybe jobs are cooling off. The market's cheering that. I guess the basic idea is if jobs data comes in a little bit light, which it did, I've got this chart pulled up here. What we can see here is that we saw for the first time in quite a while a cooler than expected jobs data point from NFP. Now, not only that, Kenzo, I noticed this. I drew this little, or made this little chart here that allows us to see the actual number from jobs compared to the forecast. And what we can see here is that the last time we had a miss in forecasts was in November of 2023, and we saw a miss of about 30K from the forecast. What is notable about the recent jobs data was it was a minus 63K in the, so that's the magnitude is a little bit more substantial there. This is the first time in a long time that economic data just straight up came in, or jobs data just straight up came in light. Do you think that this has the potential to continue the rally for some of the indices?
Yeah, I think for the indices, it's just maybe for this week or next week, because next week, if the news, let's say CPI, because we have CPI retail sales, I think also PPI around the same week. So if anything is going to go be positive, it's going to be bad for the indices, and they might actually sell aggressively. So, and if you still remember, we understand that jobless claims, they come every week. So it's not really that it's important, but not really aggressively important, because next week things might be positive again. So which means we might be going back to where the dollar can be stronger. So a smaller change on CPI or retail sales, it's going to also affect this type of movement. So I can't just say we're going to see some positive moves. Maybe next week, if things are still going down, that will be good, you see.
Sure. Yep. And as you mentioned, retail sales also coming in is going to be important, because you want to see, Kenzo, if you're somebody who is looking at the indices right now, we are priced for, arguably like priced for perfection. We need everything to stay held up nicely in order for this stock market rally to keep going, because the market is expecting that. The market, the price action here demands, like, if it's going to keep going like that, it's got to have everything coming in line. So you mentioned that next week we have a couple key data points, CPI, but we also have retail sales numbers. Now, guys, retail sales, in case you are newer to the fundamentals side, retail sales shows us on a month over month perspective how the consumer or how, spending is going on in terms of the retail level. That's a really important indicator to the consumer's health. Because Kenzo, we see these jobs coming in a little bit light, but we still want inflation to cool off, and we want the consumer to still be spending money, right?
Yes.
Yeah.
Come
so
again.
exactly.
Come again.
Yeah, I can hear you. I was just giving you, I know there's a little bit of delay sometimes in our call, but yeah. So my point with that is, again, we need to see everything come in light. But Kenzo, here's another question for you. What happens if next week when CPI comes in, what happens if the CPI data comes in hot? Now, as traders, we have to be prepared for whatever scenario. What happens if we just had cool jobs data and then we also get a hot print in the CPI for April? What are your thoughts there?
Yeah, I think that is going to change the tone of Powell, or let's say Federal Reserve in general, because this thing of cutting the rates, it seems like they don't really have that confidence, because they did not really reach that 2% that they are trying to reach. So which means anything that is actually going against that is just going to delay them cutting the rates. So at the moment, we just need everything to be perfect, which means we need those events to go down, which means if they go down, maybe around June, they might cut. But a smaller disturbance with that, they will postpone that and say, oh, maybe we can cut that maybe around September or something like that. But they will say, we are going to just wait for the data. If the data allows us to cut, then they will. But at the moment, we just hoping that this week, or let's say, sorry, coming week, things are going to be cooling off. If not, I think they will still cut maybe, but not exactly around June. I think they will actually push that further.
Sure. And, the other thing too, Kenzo, is that if we get a really light print, you mentioned that right now, I think the expectations are for like a September cut. But as you mentioned, if they get a light print, we could see as early as June or July the possibilities of a rate cut coming into the picture, especially when you take a look at the full story and you say, well, we've had a recent round of cool economic data. A couple of the points that we could point out, I mean, we have the data scanner for it, so let's just pull it up. If we take a look at, some of the recent data here together in terms of, key numbers, GDP came in less than forecast. Manufacturing PMI came in less than forecast. Services PMI came in less than expected. Next week we do get retail sales, so we're on wait for that. CPI is the other one that we are waiting to see. If we take a look at interest rates, yields have been coming down, which is nice. So that's positive here. If we take a look at, well, let's see, what else can we, I mean, that really is the bulk of it. The question is with jobs, that's the other big one. Jobs came in light compared to expectations, and unemployment also ticked a little bit higher. So all of these data points pretty uniformly are saying that, okay, the economy is starting to show signs of weakening, and
Yes.
the Fed is going to pay attention to that, right? So I mean, if we get these last variables here, CPI and retail sales coming in light, the market will probably start to position itself for very quick rate cuts. The last component, I guess, Kenzo, is like, if you get a hot print here, it throws a wrench into this whole story, because now you have cooling economic data, but they're stuck with the inflation story, right?
Yes. Yeah, so that is actually the thing, because at the moment, it seems like every economic news that we had, they are going nicely with the expectation of rates cuts. So we're just hoping that CPI is not going to disappoint. So if it's going to disappoint, obviously it's going to override everything that we saw, and we're just going to focus on CPI, and we will say
Sure.
CPI is very high. So which means we just have to wait for another month's events, let's say June's events, and see if maybe things are cooling off. But if things start to cool off on CPI now, that will be very good, even if they cut or not. But I feel like the market will be jumping very crazy going further next week if things are going to cool off next week.
Yep. And Kenzo, let me also add another trade. I want to talk to you about gold. I'm currently long gold. What we just walked through together with the economic data and what you're pointing out about the potential for rate cuts. The last thing I will say is that last thing where we mentioned all of that economic data that's cooling. If you get a scenario in which case inflation, the last domino to fall, does not come down, if it's actually hot, the way our software scans gold is it says if you get high inflation and cooling economic data, you can see there's a lot of blue here. It's getting positive reads for gold because then you are now into the stagflation territory. As much as Fed, Jerome Powell mentioned, he's like, I don't see the stag, I don't see the inflation. I mean, if you get next week inflation that's not going away and you see contraction in the economy, it's not necessarily that we see economic deterioration. It's, because he's like, there's no stag. Well, maybe not decline, but slowing plus hot inflation. That's kind of the concern. That's the whole worry about we might enter stagflation since the market is forward looking. Do you see what I mean?
Yeah, I think from my side, I feel like we are already on stagflation because if maybe the economy is not growing very quick, remember, if we check all 5 events that we got, they were all going down. But at the same time, inflation is still high. So which means the economy is not growing. It's not really growing very quick. There is companies which are cutting employees every week. At the same time, inflation is still very high. We're not reaching that 2%, and it's been just like that for quite some time now. So which means we are on stagflation. I don't know how do they calculate that, but yeah, we've been there for quite some time. Maybe next week, if maybe the rate CPI is gonna go down, maybe they will say, you see, now maybe the numbers are going down together, which means it's good. But if CPI is gonna go up next week, it's gonna be crazy because that will confirm that stagflation because we've been around here for quite some time. I think Tesla is also cutting employees, so many companies at the moment. So also yesterday we saw jobless claims. It's higher. Last week NFP was also down, so which means things are not really going very well. And it's good at the same time because we want those events to go down so that inflation can go lower. But if inflation is not going lower, that means we are on stagflation because inflation is high, but the economy, people are losing jobs and stuff like that.
Yep, that's exactly right. Well, thank you for breaking that down with me, Kenzo. That is some really key stuff there. You guys heard what Kenzo just said. It's okay if you get cooling economic data if inflation comes down alongside it. Where you start to see, in my opinion, the super bullish case for gold would be next week if you get hot inflation surrounded by cooling economic data. So next week, I guess we get some pretty good clarity, Kenzo, about the environment that we're in. We're either going to see gold look really good or we're going to see stocks look really good. I guess we're probably going to see one or the other next week. Is that fair?
Yes, I think this is something that can confuse most people because if CPI is going to be positive, we might still see gold going positive. Like it's something that we don't really get used to, where like they all go in the same direction. But it's what we're saying that we are on stagflation. It's not really like the economy is performing very well. It's just that it gives gold a good time to shine because things are not going well on the economic side. So which means we have to jump to safe haven, you see. And at the moment, we know that we have tensions all over. So gold is still very attractive at the moment. So I feel like I just hope that next week we're going to see some cool off in the CPI.
Yep. We'll have to see how it goes. And again, Kenzo, I want to thank you for coming on to the show. Before we let Kenzo go, everybody who's watching with us, do us a big favor here at the A1 Trading Show. We bring on guests from all over the world to contribute to these shows. All we ask for our audience is, number one, hit the thumbs up button on the stream. But number two, please go support our guests by following Kenzo on his own YouTube channel at Extra Hot Forex on YouTube. You can keep up with what he's got going on. He's got some great content over there. And I check in myself from time to time. So highly recommended. Kenzo, thank you very much for coming on the show. And we'll see you back next week, man.
Thank you very much, man. I'll see you next week.
All right. See ya. Okay, guys, now real quick break, just another commercial break here before we get Ivan set up. He's going to be joining the stream in just a moment, and then we will go from there. Coming after you right after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, and we are back with Mr. Ivan. Hey, Ivan, how are you?
I'm good, and you?
I'm good. And Ivan, I saw that you streamed yesterday. I've been waiting patiently to see you live stream on YouTube, and you were back. That was awesome. Yeah. Well, we know you're a regular contributor around here. Everybody knows you. Everybody loves you. Ivan, we just had some news come out. Consumer sentiment, right?
Mm-hmm. Prelim, yeah.
Yes, and it came in lighter than expected, 67.4 compared to the forecasted 76.3. Does this mean anything to the dollar, to the market?
I was hoping for some strength, but then if you just see below it, it says prelim inflation expectation, which is higher than expected. I like that one more. So because the consumer sentiment is not great for dollar, that would be dollar bearish if that was going to stand there alone. So right now, I think that those two are going to cancel each other out a bit, but I hope and pray, toes and everything crossed, that it's going to be dollar bullish by the end of the day.
Yes. So let's see, where's the dollar at here? Currently, dollar index is flat on the day. It hasn't made
flat on the day.
Yeah, I mean, you look at the candle. There's the daily chart. Jumped up, dropped down, come back. I mean, it's kind of been a quiet week, Ivan. I mean, it makes sense. We haven't really had any groundbreaking data, but what are you looking out for next week? I just had a conversation with Kenzo about, CPI retail sales next week. What are you looking for in next week's data? And are you, again, positioned more for dollar bullishness or bearishness?
Thank you for the nice curveball you gave me there. Also, next week it's US CPI and PPI. as far as I remember, at least. If I just share my screen, that would probably be even better. But yeah, so PPI, CPI next week. I think that's going to give us the strength and the weakness in the dollar. I feel like dollar is very happy to see any weakness in dollar, like any reason, and then dollar will fall. Sorry, that was the wrong way. You're going up. So yeah, we have PPI, we have CPI, and we have GDP out of Europe. Like, that's gonna be a lot of fun streaming and a lot of fun trading. So I hope and pray for dollar bullishness.
Yeah, it'll be interesting to see, again, as you mentioned, if you get some excitement on the inflation side. It's such a highly anticipated number, because as I was discussing with Kenzo, the economic data surrounding it has all come out like really weak. You've had advanced GDP numbers and PMIs and now consumer sentiment. I mean, there's a lot of numbers that are showing a little bit of a cool down. But then, Ivan, what happens if next week it just comes out with a rock star, really, really high CPI print? The market's going to absolutely freak out. I mean, the stock market is what I'm referring to, but the dollar index would probably drive higher, because, again, it's not just the U.S. that is experiencing economic cool down. It's the other countries as well. So you mentioned there's also some other data that comes out from Europe. Is that what you said?
Mm-hmm.
What data?
Yeah,
point? GDP. Okay. So what are your thoughts there? I mean, the dollar's seeing some weakening on the economic data front, but so are other places. So how do you trade that?
My brain just stopped. Easy peasy lemon squeezy. You look for your trend in the market, because that's made the wrong point. Because if I'm going to look for dollar bullishness, do I need to see lower low then? Also, the low that we made today, do I want to see that? No, I don't want to do that. So with weakness, also I want any weakness in the euro as best as possible. If you can just get anything, that would be great. But then we also have weakness in the dollar. So it's always going to be, any day, every day, it's going to be, what is the latest data is going to tell us in the trend data. And then we have COT tonight going to be, or for me tonight, it's going to be published again. Yep. I'm very curious about the yen on the COT and some of the gold. So yeah, I can't wait. That's also going to move me a bit more.
I got curious too, so I just pulled it up on the COT page here. JPY last week saw very mild buying, but yeah, I'm very curious to see all this drama around the Ministry of Finance, Bank of Japan. What's happening on the big money side? That'll be very curious. I'm very personally curious with gold. I know a lot of the audience will be as well. And Ivan, I don't know if you heard. Here's my fun current trade that I'm in. I'm in a short on Bitcoin as a bit of a hedge. I have a lot of long exposure to the stock market right now, and so I've been looking for creative ways to hedge a potential risk-off sentiment. And I just want to really quick, before I come back to Bitcoin. Right now, I was talking to Frank this morning. You know what's leading the market is XLU. This is utilities. These are like power companies. Okay. Keep that in your back pocket for a second. You know what else is? XLP. These are consumer staples. These are like your very conservative companies that just like your Walmarts and your like, things that, everybody needs, like tissues and toilet paper. Like everybody needs that. Okay. XLP, XLU. You know what else is up there is, what was my last one? I had one more. Oh, XLF, financials. So my point was showing you that is that this market right now is not being led by technology. It's actually being led by defensive stuff, which is very rare and very interesting. So I think that for me personally, the market looks a little bit wobbly. It looks a little bit nervous, and we may be in for a bit of a risk-off move, which would be kind of like be long the dollar, be long sectors that are more defensive, maybe short Bitcoin, long gold. That's kind of where I'm positioned for. I don't know. What are your thoughts on that?
I love that, but I would never short Bitcoin after that.
Come on, it's
After
fun. The water's
that
just
long
fine.
explanation, Bitcoin. that's your conclusion.
Well, here's the thing.
On your
That's a good point. The reason I do like the potential for shorting Bitcoin is a really small position that, if it worked, can still yield great results with relative small risk. And if the stock market just keeps ripping higher, Bitcoin probably will too. But my long positions on the S&P 500 would greatly outweigh this risk. So it's kind of a hedge. It's not necessarily like a straight up, just all in short on Bitcoin. So there's a little bit more context for you.
Okay, let me put it differently then. If I was thinking risk off, like clear risk off, I'll probably I don't know.
Go
Sell
long
New Zealand or
dollar, long VIX,
Sell
short
New Zealand.
S&P.
Yeah. No, S&P I wouldn't touch because that just goes higher for no reason. Absolutely no reason. It
Fair.
doesn't matter the data. It just goes higher anyways.
Yeah. Bad data up, good data up. Until someday it won't. That's the other thing too, Ivan, is like someday the market will do the opposite. I remember in 2022, I kept trying to buy the stock market. I kept trying to find, breakout points, and you would get these moves, like it would break out, but then it would like fizzle out and just take out the lows again. And it was almost like the stock market is such an emotional thing. When it's in sell mode, it is in sell mode. When it's in buy mode, it is in buy mode. It's such a, long term, obviously, yes, it just typically goes up, but these sells were so violent. I remember just watching day after day, and a lot of names, Ivan, a lot of Bitcoin too, a lot of like high risk, high growth names saw drawdowns during that time of like 80%. It was crazy.
What do you mean? As those peaks, if you put what do you call it in English? What if you put FOMC on top of those? Those are quite close to those peaks. There was buying with the market before FOMC, and then it fell.
Yeah. I remember that. That's so true. I remember just like every meeting was like didn't matter what they said, sell the market.
Yeah.
It's crazy.
And this is what, 7th of April, 2022. When did they start their rate hike cycle? Was it 22 or 23?
I think they started in 22.
So every year, every meeting in 22 would mean that that's going to lead to falling. And when did it stop falling? When did it start going higher? In 23, when inflation said, "Okay, we are starting to fall and cool off, and we might have a cut soon."
Yeah.
And then in December, it took off.
Yep.
So it's
right
easy.
there. Because now, that's it. You broke that down for us pretty well, Ivan. I mean, this was, you can just basically tell the whole story. Oh my gosh, rate hikes. And then right here, pause, start to buy. And then it was like, cuts are coming right here. But here's the thing. The question is, Ivan, what happens when we actually get the cut? Because historically speaking, the Fed has not had a good track record of having a soft landing once they do actually cut. So if cuts are coming, is the phase that we're in right now, the market's really optimistic about cuts coming. That's historically what happens. But then when the cuts actually come, it's usually recession. Isn't that right?
More than anything else. But let me put it a bit differently. what are we using stock market for? Are we using it for active trading, or are we using it for position trading, or are we using it for future generations? Because if you hold a trade on stock market, mostly, I think in America, mostly, by 10 years, you're 100% right. You're going to be like, if you bought the peak before COVID, you still have made money. Like
That's true.
So,
That's true. If you have a long-term horizon, you're definitely right. You can just passively invest. Just don't say anything to people in Japan who had, you know, a breaking, you know, hey, Japan's going to take over the world back in like I think it was like the 80s or 90s or something, and then their stock market still hasn't recovered. So, you know, it is possible to just full transparency. Indices do not go up forever all the time, indefinitely. But Ivan, you're correct. The U.S. stock market, with hindsight in our favor, is the dominant stock market.
That's why I make fun of you a bit, because when you say that 2022 was so difficult, yeah, it was a difficult year trying to catch something going higher.
Yeah.
But then you are forgetting the long-term horizon that you have or should have or do have sometimes. And when you look at the P&L, it's very frustrating, because I remember, was it 22? Also 2020, where you were down and you're like, you couldn't make it work. It just didn't work. Whatever you did, it didn't work. I remember you being so frustrated, and I'm like, yeah, just wait. It's going to be all right in the end. And it did. I don't know what your portfolio is by now, but
sure.
but the point is don't, even if it's a year, don't be frustrated with gold, with the stock, with Nasdaq, with Dow over 1 year performance. Even we're going into one, by the way, now, I believe, in going into the US election. Stock market is not going to do anything crazy. It's not going to give you anything, any trend or anything. That's going to be frustrating, and that's going to be another test. Are you able to keep cool, and are you able to keep patient?
Yep, exactly. Well, and that's the thing, Ivan, is like, you know, for me personally, I have a couple different accounts. My wife and I have an account where we just are super passive, where we just, you know, buy index funds, and she just manages that part. And then we have like, you know, I have another active account that I don't usually showcase on the internet. And then I have like my main one that I talk about all the time, which I'm only active in. That's where I'm trading, where I'm active, where I'm doing options trading. And, you know, I think that you're totally right. I think like you can have a long-term perspective. And I do actually encourage people, you know, all of your money should not be in your active trading. I think it's pretty important that you have a dedicated portion that is just in slow and steady, stable stuff, whether that be a mix of bonds, whether it be a stock. Like, I think like you can be like a passive investor, and you might be able to collect anywhere from 6 to 10%. Now, also, you always hear this is one thing that kind of bugs me in the finance world. You hear people say like, oh, just buy and hold the S&P 500, you'll make 10%. But again, you are talking about the most dominant stock market of the world of the last century, with hindsight in your favor. At the beginning of that century, you wouldn't have said buy the US stock market and hold it for a century. You probably would have said buy the UK stock market when they were the dominant kind of world first order. So my point is, you know, with hindsight, yes, you can get 10% in the stock market, but that's not guaranteed, not promised. And in the future, you know, there's also suspended periods of time where believe it or not, the global index actually has outperformed the S&P 500. So, you know, that's just the hard part about it. Nothing is easy in the markets. Nothing about trading, nothing about investing. Because, you know, in 10 years, Ivan, we might look at it and be like, wow, we should have just bought the global index because maybe Brazil takes off, or maybe, you know, I don't know, South Africa or Europe or, you know, China. You know what I mean? It's just, markets are just hard, are they not?
Yeah, it's said with a pinch of salt, and for comedy reasons, but the learning point is always going to be, patience is a virtue, and it has historically been the one that has been paying off at least slightly something. I don't remember Nasdaq last year, what was the year to date on that one, but
I think it was like 36. Let me check. Let's just go from here, like right here, start of the year, to the end, December. Yeah, it's about, that can't be right. 53. That might be right. From the very bottom to the very top, there's like 53. Before that, you had a 38%. So it came back. It took you, if you bought over here, it took you 784 days to get back to break even. So
barely in profit
with
by now, but
patience, with patience, that ended up doing all right.
Yeah. But yeah, you can't do that with Forex though, but you can't. So what my point is with all this is that how things is set up, how I see things is set up is that governments are set to make businesses make money. They have incentives. The tax situation, the regulations, everything is set there for businesses to thrive, at least in most economies, Cuba. And you are going to have companies overall, generally speaking, when they are profitable, when they have found their niche, Coca-Cola, that they last for a long time. That's what we want for businesses. Of course, many of them fail, but then they also don't get added to the S&P 500 if they fail.
Yep. Well, and that's the thing, Ivan, too, is like, I make that point about like the global index and about like the hindsight of the American economy. Nobody knew 100 years ago, or whenever the U.S. kind of took power. I think it was like World War II. After that, they just became the dominant, like the only real, world power for a while, and they really enjoyed that post World War II period where the whole world owed them money. I mean, we could do a history lesson here. That's my nerdy like favorite thing. I love history, but without getting too sidetracked, I still think, to your point that you just made, I'm still very bullish U.S. equities, U.S. dominance, because the U.S. is set up for capitalism to thrive. And there's criticisms of capitalism, but I'm through and through a capitalist. I own a business. I love the U.S. And before I get all Eagles and football, my point is, I think that your point about good businesses being set up to prosper is advantageous in certain parts of the world more so than others. Like a big criticism you could make about like China is like the communistic kind of setup for businesses. Is that really a fruitful environment for businesses to thrive? I don't know, but I do know it's proven, as you mentioned, that the US has a proven model for like allowing businesses to incubate and grow massively powerful thanks to the growth that is, the growth potential that is capitalism. Capitalism is not perfect, but it certainly produces powerful businesses.
Hashtag Alibaba.
Yes.
Hashtag what else?
Tencent.
AliExpress.
You don't look at Neo's, don't look at that one. But Baidu is another Chinese company. Not to say that there's China's not, but look at their stock market, man. I can't even imagine how frustrating. GDP growth has grown in China dramatically, and yet the stocks there, the companies have still, stock price wise, have done really poorly. And I love, like, Baba is like such a profitable company. That's a monster company, and yet it trades so poorly because of the arguably because of foreign investment being afraid of the Chinese government. Is that like, is there anything else I'm missing?
Nah, I think what happened was that a lot of capital left because of regulations and the sharp turn in regulations, where you overnight can be tossed out. So
yeah,
but that's what has scared foreign investors, and I, in my little humble opinion, is I would like China to be different. I would like China to be also that it would be a safe environment for us to trade, because it's such a huge market, that has so much potential.
I totally agree.
And yeah,
No, I totally agree with you, Ivan. I mean, that's the thing is, I had a position on FXI that I did end up making money on. I'm no longer in it, and I can't lie. It's just part of it is just the uncertainty of what am I investing in. Whereas with U.S. companies, I know what I'm investing in. That's the tricky part. So, anyways, Ivan, we've gone really far off course here today. I want to ask you. Let's dial it back for a second. Any setups that you're watching? Any things that you're watching into the Friday close?
I'm actually getting what I want.
Okay.
But I want new lower lows on Aussie, Euro, Pound, New Zealand, in particular New Zealand. They just made a high today, so I hope that's going to be the high, and then we're going to make lower lows tomorrow. So right now, the close of this candle in the 4-hour, I really like it.
Okay, so Kiwi dollar. You're looking at. Are you looking at any yen pairs?
No, they're just slightly going higher. Everyone is just slightly going higher, slightly going higher. Haven't had a pullback in a good week. So unless you want to buy at the highest high.
Yeah,
then,
right, exactly.
Good luck on that.
So again, you've got stocks back to flat on the day. You've got the dollar up slightly. Okay, there you go. The dollar's up. Gold up, 0.75%. You got the VIX up a little bit on the day. Euros down, pounds down. It's just another Friday in the markets, Ivan. I guess it's kind of just been a boring week as we get ready for CPI. So maybe we'll just call it there and have a good weekend.
Yeah. I think that's the best at this point. It is going to be a long weekend, but it's going to be a good weekend.
Yep. Well, before we shut down the stream, let me just call to attention really quick. Ivan does some coaching one-on-one. He also does group coaching within our Discord group. If you're not already in the Discord, real quick, we'll drop the link to the free one. If you'd like to consider, becoming a member, you can do so, or you can directly message Ivan. He actually offers one-on-one coaching at very, very affordable prices. If that's something you're interested in, please feel free to follow Ivan on his own YouTube channel. There is the link. Subscribe to Ivan FX on YouTube. And I noticed it's Ivan FX with a W at the end because he's always taking W's. And so make sure to follow Ivan. Big shout out. Thanks very much, Ivan, for coming on the show and adding value to the show.
Thank you very much for having me.
All right. See you, Ivan. All right, guys. Last thing I will say before we shut down the stream, I don't know if you heard this yesterday or not, but we are currently doing a $1,000 giveaway to the community. It is 100% free to join, no strings attached. If you'd like a chance to win, we're giving away $1,000, but we're giving it $500 to 2 different people. So 2 different lucky winners will be selected to get $500. If you'd like to join the giveaway, we've got the link here. Thanks, Chandler's on the button today with that. Thank you very much. Click this link, join the giveaway. It is free to join into your email, and we will be selecting 2 special winners for $1,000 total. Take advantage of it. The reason we're doing this, long story short, I asked trading influencers to share their track record. If they could do it, I'd give them $1,000, and I'd give $1,000 away to the community. We had one step forward. The video is out on my channel if you'd like to go watch it with Marco, who's a regular stream contributor, by the way. And so stick around for more content coming later on. I've got a video that I've got to put together. And I'm going to get off here before my voice goes dormant. So thank you guys very much for hanging out with me, and we'll see you back tomorrow or Monday. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.